Greetings, members, one and all of the Salivation Nation. I have the pleasure of speaking with Jonathan Swires from Monument Metals. He has agreed to join us here for an interview. Hello, Mr. Swires. How you doing, sir?
Hey, thanks for having me again.
Sure thing, yes. For those of you who don't remember, it's been a while, but I did a series of interviews with bullion dealers, and Jonathan was a part of that for Monument Metals, and he is back with us today to share some insights about the market from sort of an inside perspective as a bullion dealer, to kind of get a pulse on the craziness that we've seen over the last year and a half plus in terms of getting stock, what's been selling, and where things are, and what bullion dealers are doing to prepare for what I think is probably going to be a coming shortage of product, silver product like coins, rounds, and maybe even bars down the road. So, Jonathan, your company is a little bit unique compared to other bullion dealers out there. You're relatively new on the market as Monument Metals, but you've been involved in precious metals a long time. But we'll start with just kind of a background of Monument Metals and kind of where things stand with you right now.
Sure. Well, thanks, Sal. I mean, like you said, I've been on the show before, and thanks for having us again. I've been in the bullion business for my entire professional career. I've worked with many of the wholesalers that you guys have heard of, many of the retailers that you've heard of, pretty much anybody that's anybody I know of them or have worked with them in some way or another. I worked at a large wholesale and retailer previously, and I was working there, and I didn't think that the online experience had been done correctly at that point, and so I left to do this myself, and we've been growing ever since. We've been in business for almost 5 years now as Monument Metals, and or online almost for 5 years as Monument Metals, I should say. I mean, the growth is pretty insane. I got to tell you. I mean, a lot of that is buoyed by what's going on in the market as a whole, but I think being positioned and doing a lot of the legwork that we've done to be in the right place at the right time when the market sort of floated all the ships in the water, I think put us in the right position to succeed here. And a lot of it's due to the community, Reddit, your YouTube community, and other stackers who just do word of mouth. We don't spend a single dollar on advertising here. It's all word of mouth.
So you're a good bellwether for where things are going in the market, and as far as where you're sourcing product and how you're selling product, and you've seen a great increase in sales, especially since the pandemic. We saw the silver squeeze movement. We've seen other types of great demand for product. We've seen high premiums during that time, and can you speak a little bit to that as far as going back to March of 2020? That's the month and year that I think sticks out in everyone's mind when we saw silver literally crash to below $12 an ounce, and that's when we saw a frenzy for silver.
Well, I remember the day. It was March 12th, 2020. That was a pretty wild day. I mean, the business before that day and the business after that day are almost two separate time frames. I mean, before that day, the level of demand was so much lower. I think, people who are newer to the precious metals market, who started buying in, say 2019, 2018, those years when the market was much lower and there was much less demand, when people were buying, spot deals from every company, and on Black Friday you could buy everything at spot or like a dollar over. Those days are gone. And what people have to realize is the reason that those kind of deals existed was because the precious metals market in that date range was one of the worst ever. It was the worst it had ever been in my career. And many who've done it longer than I have told me that it was the worst in theirs. So, you got to remember, those spot deals and those extremely low premium environments that we were doing business in were because that demand was so low. There was so much more demand for money elsewhere. I mean, the stock market at that point had been on, essentially an 11-year bull run. Granted, it's still going. But, even back then, there was a lot of more competition for money in other places, and bullion was not performing, and it was not seen as needed quite as much as it is today based on what's been going on in the world. So as far as basically those date ranges, I would say they're sort of a BC and AD kind of from March 12th, 2020. I think the current market and the post COVID world in precious metals is going to have, even at a very baseline, much higher level of demand just based on what's going on in the markets here, what's going on in the markets overseas, the inflation that we're seeing, all of the movements we're seeing, the silver squeeze and all these kind of things. I think, I guess an easy way to put it is, the bad days are much better. There really aren't any bad days, I should say, but the lower days are much, much higher than they used to be. So when we get those questions from new clients saying, when are you bringing your spot deals back, and when can we buy at 20 cents over spot again? I mean, those days, I don't want to say that they're over, but they're not anywhere in the foreseeable future based on the level of demand we're seeing.
They certainly aren't transitory like inflation supposedly is for the Fed, right?
Come on.
That's right.
Yeah. So, I mean, the Fed released a statement today. I think most were expecting a taper, but they decided to keep the federal funds rate at 0 to 0.25%, which I thought was a little surprising. But markets don't always react immediately. It'll be interesting to see what happens tomorrow.
Yeah, and speaking of competition, as far as for people's money, where people put their money, we've had things like, the silver short squeeze, which was born out of the GameStop and the Wall Street bets on Reddit, and GameStop and AMC, and they tried to short those stocks, and it's easy to do with a Robinhood app. Trading is so much easier these days. And also with the cryptocurrency, the crypto sphere is certainly growing as well. And that's direct competition.
And it was sentiment too. I mean, the sentiment was that, as long as we're printing money and as long as, the economy continues to improve and, everyone was calling for a stock market crash. It's not happening. I'm talking about, 2019, sort of thinking. Here, I could put my money in Bitcoin and it'll be 10,000 by next year. And, there are just a lot of different places to put your money that, seemingly had a much better chance of growing. My argument would always be that precious metals are a hedge and a great way to insure yourself against losses in other more profit-centered areas. But that's just me. The way a lot of people end up buying is a little more emotional than a lot of us like to admit. So if the metrics don't look great, you're thinking about other things, real estate, you're thinking about crypto, you're thinking about stocks, you're thinking about a lot of different things.
And that's a very good point. Emotion is a big driver. In fact, it drives precious metal purchases as well. And that's something that I try to warn against on this channel. Even though obviously there is some emotional attachment to something that's tactile, that's in your hands, that's physical. But nonetheless, people buy and they should buy with the expectation that it will preserve your wealth over the long course of time. But we are seeing higher premiums now since the pandemic. Like you said, it's two different eras and we live in a new era. And we're seeing very high premiums, especially on Eagles. We have seen it subside a bit. I think there's something happening in the market nowadays, and the supply chain issue we've seen across the board is certainly having an effect on precious metals. Can you speak to that a bit?
Well, I would say in regard to higher premiums, I wouldn't necessarily look at it as higher premiums. The cost, forget about spot price plus premium. Just think about the overall price you're paying for something. So like you could say, if I want Silver Eagles, spot price is $23.50-ish, right? And then you might have to pay $8 or $9 over spot for that, which is too high in my opinion, but it is what it is. But the real all-in price for that is $33 to $34 or right around there. So forget about premium and forget about spot price. It just costs you $33 to $34 to get that Silver Eagle. The point of me bringing this up is I think premium increases are sort of a decoupling of physical and paper prices. There's a ton of influence that paper trading in silver and gold has on the overall market. And to be honest, the level of physical demand we've been seeing for the last year and a half plus speaks to a higher market. And spot prices are not higher. They're somewhat higher, but they're not as high as they were, say, about a year ago. I think it was last August or September, I think silver was just under $30 for spot, and I think gold was a little over 2,000. I think that was the most recent high. Correct me if I'm wrong, but ever since then, and even during that time, the fact that you had these higher premiums, I think there was sort of this call of one of the dealers going to stop being so greedy with their high premiums. That's not how it works. I mean, when it comes to these higher premiums, I think you should just factor that into the overall price that you're paying. Don't see it as some extra fee that's being tacked on. I think really when it comes to physical product, I think you're going to continue to see this from now on, because in reality, paper silver and paper gold are easy to buy. They're an app away. But buying this stuff physically, getting it shipped to you is getting harder.
Well, and I think the overall message here is that, yes, as consumers of precious metals, in other words, we buy them, we see spot price and we see premium, but that premium is made up of the cost that it takes to produce the pieces, like blanks, rounds. There's the cost to produce, the cost to get it to a broker, the cost to get it to you, which you have to pay for it. And then finally, your profit on each sale of each coin or bar or round. Yes, that's right. So in other words, if you have $8 or $9 over spot for an eagle, for instance, you may have to pay. You may only be charging the same premium that you were charging before.
I mean, listen, Sal, there's only a few direct U.S. Mint APs in the country. I'm not one of them. Most of the people you talk to aren't one of them. If I had to buy Type 2 Silver Eagle boxes right now, A, they would be 4 weeks out, and B, they would cost me $8.50 an ounce over spot just to buy them. That's before I sell them to anybody.
Right.
That's my cost.
And that's the thing people need to understand, is that the premiums we are paying, part of that premium is gobbled up along the way. And so when a bullion dealer buys Silver Eagles, they are paying a lot for them. And probably, and by the way, the actual cost from the United States Mint to these AP, which is authorized purchasers, has increased as well. So inflation is all across the board. Yeah. So moving ahead here, talking about the supply chain, and we're talking about how long of a wait it is to get these eagles, especially, and eagles are in great demand now, and that's probably where you're starting to see this happening again, where now there is a bit of a wait. Can you talk a little bit about that, what bullion dealers have done to prepare for this?
Sure. Well, so I guess it was, I'd say, end of September, so about, maybe 5 weeks ago, there was a big drop. I think we were trading around 24.50 to 25 in silver, and there was a drop over about a week, all the way down to sort of the 22 high 21s in silver. And right. I could get my dates wrong.
I think that's right.
Run together here a little bit, but during that time, I think a lot of bullion dealers sort of saw the writing on the wall in terms of demand. Because another thing you got to remember is, we're in the fall here. So you're getting into the season where mints are stopping production of their current year coins and switching to the new year. So that adds a layer of complexity here. So I think a lot of bullion dealers said, hey, price is down. Premiums have come down a little bit since, the summer when they were a little bit higher. Now, granted, they're going back up again now, but at that time they were still a little bit lower. I think bullion dealers that had any extra cash that they could put aside were saying, let's buy more than we normally do because I see what's coming. And so I think during that week, I think you saw a lot of bullion dealers take huge positions in the staples like Eagles, Maples, 10-ounce bars, 100-ounce bars, 1-ounce rounds, things like that. The staple bullion products. The bullion dealers that did that have plenty of stuff in stock and they're selling it. Their premiums have been going higher. But if you didn't make that move, and if you didn't buy as many as if you didn't overbuy, if you have to place new orders with mints right now, they're incredibly delayed. Like Silvertown material, Silvertown makes way more stuff than you guys think. Silvertown makes a ton of stuff. Silvertown rounds, Silvertown bars, you're looking at 4 to 6 weeks out if I had to place a new order today. Silver Eagles, a month out. You can get Silver Eagles that are live, but they cost even more. And the list goes on. So I think what you'll probably see is, I think many of these sites, you may not be seeing these delays yet, but as soon as these dealers sell out of their current allocations, there's going to be pretty sizable delays. The question is, will the demand curve sort of smooth out before they run out of their stock? I don't have the answer to that. In my opinion, based on what I've been seeing, things have been heating up rather than cooling off.
Yeah, it certainly does seem that way. I mean, because the silver market is pretty extensive, and I don't know gold too. What are your thoughts about gold? Are you seeing the same kind of activity and excitement there?
Honestly, yeah. I mean, I can't speak for everybody in the market. I can only speak for us. But I would say over the last few weeks, I've been selling a lot more gold than silver. I think in general, I think smaller buyers right now are a little bit on the fence. I think smaller buyers are thinking, and justifiably so, I think they're thinking, look, silver is up $2 an ounce from the low of about a month ago. But I'm not entirely sure where we're headed from here. I think it should be higher. So does most of the market, but it hasn't moved higher. And then you've got, these increasing delays, and you've got higher premiums on top of that. So the smaller buyers thinking, I'll bet if I wait a month, maybe two, if I'm not in a hurry, maybe I'll come back and spot prices may be a little bit lower, and maybe premiums will be also. Whereas I think the larger buyer is looking a little more long term at this and seeing, like, look at this inflation that's happening. I mean, you saw it in the Fed statement today. If you looked at it, they're not tapering because they can't.
Right.
They know what would happen if they do. So I think my larger buyers are in, and they're in strong, and they're buying in large numbers, and they're buying a lot of gold. And I think silver, depending on what the product is, there's not a lot of low premium silver out there at all, really. I mean, even 100-ounce bars, which are, typically a pretty good measuring stick. I see a lot of people use Silver Eagles as a measuring stick. I really wouldn't use those just because they're so high premium. But 100-ounce bars, in my opinion, are a pretty good measuring stick where the market is. I wouldn't use 1,000-ounce bars because most people can't buy those. But 100-ounce bars, you could buy one if you had to. In my opinion, those are probably, one of the better deals in silver. But at the same time, you're still paying $2.50 and up, depending on which type of bar it is. So, I mean, even that has a higher premium right now. It's not as high as it was in, prime COVID, weather last year, but it has moved up from where it was, maybe about 50 to 75 cents an ounce.
And I do think if inflation continues to be a thing, and we know that the Fed has said that it's going to happen at least through next year, at some point probably through the 3/4 of next year, we're going to probably continue to see rising prices for everything, not just in terms of the everyday goods and products we do, but also for the buying precious metals. Those premiums will go up just as a case for regular inflation as well. And so what kind of products are you seeing coming your way that you're selling right now that you have available?
Well, I mean, we've got a lot of these things available. Like I mentioned, earlier, we saw a little bit of the writing on the wall and bought, a little bit more than we typically buy in many of these products. I'd say probably the single most oversold product in the market are silver rounds. I mean, good luck finding silver rounds once the ones that dealers have in stock are gone. Good luck. I mean, that's going to be a while. I would say probably one of the more popular silver items right now are kilo silver bars. It's kind of a nice sweet spot between, hundreds and 10 ounce. You can still get relatively low premiums on those. Those have been really popular. Those are a little more available. You can still buy Eagles if you want. I think the premium's too high personally, but if you want them, they're there. I would say I've probably sold more Silver Eagles at $7, $8, and $9 over spot than I ever did when they were $2 or $3. I mean,
Wow.
it's unbelievable.
Right.
The amount of demand on these. The one thing that I would watch out for is you're going to start having the 2021 versions of a lot of these government minted coins like Eagles, Silver Maples, Silver Phils, Silver. What are some of the Silver Kangaroos? A lot of these are hard to find right now, and are going to get harder to find because these mints are starting to slow down their year-end production because they're going to start making the 2022s.
Right.
I mean, we just put up the 2022 Silver Eagle pre-orders this week. I think we're already selling 2022 Silver Britannias, and these other mints will follow suit here soon. And there's sort of this, strange sort of way that things end. The mint doesn't, come out and say, "Hey, we just stopped making those." They just disappear and then they're gone. And then you've got X number of weeks to wait until whenever those 2022s come out. So you might get squeezed a little bit there with some pre-order timeframes switching between those two dates. But honestly, if you're looking at silver or gold, I would say gold is a little bit more available still in terms of your more mainstream products like Eagles, Maples, Philharmonics, things like that. Gold bars are no problem. So I wouldn't really sweat it in gold, but silver, you're definitely starting to see those delays.
And you mentioned earlier that you've got some kilo bars as well too that they've got in stock now as well.
Yeah, I mean, we bought a ton of different kilo bars. Many people have bought the Germania kilo bar from us. That's a pretty bar. That's been a really popular product for us this year. But those have gotten pretty hard to get. That mint's having a little trouble keeping up. But we bought a bunch of these, what they call JBR kilo bars, which is made by Silvertown Mint. It doesn't say Silvertown on it, but Silvertown makes them. They've been pretty popular. We're trying to keep premiums as low as we possibly can on those. We're selling those at $1.99 an ounce over spot. I bought as many as I possibly could that were live. So I don't know how long they'll last, but go for those.
Very good. All right. Well, thank you so much for the insight that you've given us on the market, where things are headed. And it sounds like you're saying that we could be in for some big delays if things go and their demand continues to stay where it is or increases. And makes sense. So very good. Anything else you want to share with us before we go?
I would say in general, for not just for us, but probably most of the sites, get ready for holiday delays with shipping. I mean, I don't know if you guys remember last year, and maybe my experience feels different because I'm in here every day with this stuff. But last year, 2020 Christmas time was a nightmare. If a dealer offers any kind of upgraded shipping, charge for a reasonable price, pay it.
Wow, right.
I remember last year it was horrible, especially with the post office.
Right.
I think there was one point last year in December. I think we had almost 400 packages that were delayed over 3 weeks.
Wow.
And based on what I'm hearing from our local people, which I don't know how our local compares to the nation, but I'm hearing it's probably going to be like that again. So we're trying to avoid the post office as much as we can already, but we'll see.
Probably not going to be many Black Friday deals either, will they?
Well, I mean, I'm sure there will be Black Friday deals. I mean, I'm sure we'll come up with something. The problem is, if you started buying in 2018 when you could buy stuff for spot and buy rounds for spot or things like that, they're not going to feel like deals.
Right, exactly.
Yeah, and that's where that whole narrative of like, why are these guys trying to stick it to me with these high premiums again? But in reality, we're probably, in terms of what we see on our end, we're probably pretty close to the same. I mean, spot prices are a little higher than they were. So percentage wise, we're making a little bit more, but that's because we have to.
Right.
But I would say in terms of the spreads of what we're offering, I mean, it's pretty similar to what was being offered back then. Just the difference is, premiums are a lot higher, and a lot of these manufacturers are increasing their prices to us. I mean, it's got to trickle down.
Very good. Well, Jonathan, thank you so much. This has been a great interview and hope we can do it again soon. It's nice to get a pulse on the market from a dealer perspective. I will post a link to Monument Metals' website in the description below. This is not a sponsored video, just so you understand. I would say if it was. But nonetheless, there you go. Thank you so much, Mr. Swires. A multitude of gratitude to every one of you. And I want to encourage you to please rate, share, and, well, stack on.